guys and girls, it's Nathan Birch here from B.Invested.com.au, and today I'm here to talk to you about the property market and the economy in general. Today is the 2nd or 3rd of February 2015, and there's some changes happening in the economy which I want to talk to you about, and some things to be aware of for 2015, and the biggest thing of today being the interest rates. For the last 5 years I've been predicting interest rate changes, and I use that through my research of looking at different markets and different things that are happening out there broader than the property market, through the business, the economy and all those sorts of things. And it's important that you keep your finger on the pulse when being a successful property investor, to actually understand outside economic factors so you can make an educated decision when purchasing property, whether the market's too hot, whether the property market's too soft, whether it's a good time to buy or whatnot. For me, I made a call today on Facebook saying that interest rates were going to come down. There's a 65–70% chance of the interest rates falling today, and if not, it would be a 100% chance that in March 2015 there would be. Fortunate enough today for property investors and those who want interest rates to come down, the actual interest rates did drop by 25 basis points, being 1/4%. For me personally, I enjoy this because I don't care if they go up, down, sideways. There will be things that I will benefit from every move that they make, as building my property portfolio is a key priority. For me, interest rates going up, what does it mean? It means the opportunity to purchase more properties cheaper, and people being scared about purchasing, so it makes the market a little bit softer. Within saying that though, a lot of the last greatest booms have been done when the property market when the interest rates are on the rise. So there's contradicting things. It's a matter of sifting through the market and getting the best result. From that, the biggest thing that I see is a better opportunity for rents to rise. So for me, interest rates don't affect me because I've got a low LVR, a very low LVR of 30% or less over the whole portfolio. However, I see that rents being on the rise when interest rates rise is awesome. On today's instance, what I see is that property markets have been heating up around the country. We've seen Sydney prices over the last 12–24 months increase quite dramatically, which is good. Looking from that perspective, I do believe that you will see further growth through the market. In Sydney, there will be a time when suckers come in the market, people do get burned, so it's important, buyer beware, do your research and only buy properties of good value, and make sure that the ability for future growth is there, because I know there's a lot of markets which are teetering on the edge of affordability being impossible, so it's important that you know what you're buying and can see a strategy ahead for growth. Gold Coast and Brisbane, those markets are just going to explode in 2015. Anywhere in Queensland, apart from mining towns and little sticky towns, being in big regional hubs or in Brisbane, Gold Coast will be a big moving area this year. Other areas of the country, Perth, I don't even look at it, it's too far away, and prices are too expensive. Melbourne, those guys think they're too cool with having arts and crafts and all that sort of stuff down there. That's a different market. These two markets are solid markets. These are the markets that I'm still investing in, and I have been doing for the last decade. Just reverting back to one other thing that you should be aware of in the current climate. People say interest rates have got to go up, etc., etc. I want to touch on a few points. First one being interest rates when they do rise. I don't personally think they're going to rise for 12 to 24 months. The reason being is that we are a country which is getting lazy and we don't have much to produce and send out to the rest of the world. So technically the country could enter into a recession sort of state if we weren't doing something about it. Being a young country with lots of people coming to the country, there's lots of growth and booms ahead of us, so don't be aware, don't be alarmed. The government has to stimulate the economy somehow, and that being for construction of new dwellings, because we've got a severe supply and demand issue and imbalance, which I've seen happening over the last decade, with finances for construction finance being on the low. So we've got a convergence of a few things here, and I see that for the country to move forward over the next decade, there'll be needing to put a lot of infrastructure in place to produce for the rest of the world, as well as house people. So one thing that's going to keep the economy stimulated is having tradies and jobs, keeping plumbers, electricians, brickies, carpenters, all that sort of stuff employed, and that comes from building new dwellings. To increase interest rates anytime soon, it would kill the economy, and it's something that we will not see. So I don't think interest rates will rise in any time very soon. Lots of areas in the industries are suffering in the current climate, being retail, mining, all those sorts of things. Everyone always has doom and gloom around it. Property is the thing that's keeping the country afloat and keeping a lot of money happening. Other thing to be mindful of is commodities. I expect the Aussie dollar to keep dropping as the interest rates go down. I don't think it'll go less than 70 cents to the US dollar, but it is where it's at the moment. It's heading towards that direction. I think that'll be the bottom ground for it. What it will mean for you as end users, your interest rates will be cheaper. For me personally today, I've got say $10 million worth of loans out there. I don't know exactly what it is, but $10 million worth of loans, that's 25 grand a year in savings on interest rates, which is pretty cool. With it, one thing that you should be aware of is that as the Aussie dollar drops, putting petrol in your car will increase. I know that the commodity prices have dropped around the world. I think that'll be a short-term thing as there's other outsider factors affecting the economies in different parts of the world. Commodity prices are falling. I reckon they will go on the rise in the later part of 2015, 2016. They won't stay there for too long. But do be aware that some of the little cost of things. I'm in the process of selling a vehicle that I purchased 12 months ago. It was a Jeep. The Jeep I'm paying $80,000 for. Normally they sell for $90,000, so 10 grand below market value. I went to sell the car as I'm purchasing a new one, and I realised that when I put it on the market that they're actually selling for 80, 90 grand for a second-hand one. That's because the dollar has dropped and everything's more expensive, so the brand new cars are selling for 10 grand more. Second-hand cars haven't really dropped that much, so drive a brand new car for a year and don't lose money on it, happy days. So just to be aware of outsider factors. There is a really cool factor that's isn't really talked about, and that's tourism. And I know that a lot of tourism areas have dropped over the last few years with the Aussie dollar being so high. It's unattractive for people to come here. So literally there's parts in the country where Asians will fly into the country to play golf because it's nice and cheaper and more affordable. That has not been the case for the last few years since the GFC. Being affordable for the rest of the world, it will attract tourism into the country, and those tourism sort of areas will go up. So for all those people that bought in Cairns all those years ago, and I said buy when the market's low, wait for the market to get high. This is the sort of time where people are making millions and millions of dollars based on the fact that they'd educated decisions based on a lot of research. And one thing I can say is there's lots of money to be made out there. Over the last decade, there's been GFCs, there's been poor economies in the country, global economies, and there's lots of money that's been made from lots of people that I know. And over the next decade, I'm sure there will be much of the similar. So I'll leave you with all the information, process it if you will. I do make a call today on YouTube to think that the RBA will probably drop the interest rate by another 0.25% by the end of 2015, and I do not expect them to go up. It'll be either flat or drop, small bet, no up, not for 2015. Enjoy and giddy up with your investing. Just as a last little note, guys, this is not financial advice. Do not construe it as that. I'm just talking for giggles. You make your own financial decisions as you will. What I talk about is just purely for entertainment purposes. I'm no financial advisor. However, I am a property investor who's been very successful with property investing using these same strategies and systems and procedures for the last decade. Good luck with your investing, and make sure that you speak to independent advisors to be able to help you get to your own goals, and make sure you use the right advisors that do invest and are achieving the results that you want to achieve. Catch up soon. Have a great day.